Good morning and welcome to the Business Standard Morning Show. I'm Debarghi Sanyal. It's the 14th of September 2023 and here are the questions we'll be answering today. Is it the end of the road for diesel vehicles? Can NVIDIA help India overcome the AI gap? Torrent versus DRL, which is a better fit for Cipla? And what's new in the Apple iPhone 15 and watch? Road Transport Minister Nitin Gadkari clarified on September 12 that the government was not actively considering an additional 10% tax on diesel-powered vehicles. The statement came hours after the union minister said he was going to propose a 10% additional GST on diesel-run vehicles during his upcoming meeting with Finance Minister Nirmala Sitharaman. This quick turnaround came 3 months after a panel commissioned by the Oil Ministry suggested banning all diesel four-wheelers in cities with 10 lakh or more population by 2027. So is the end near for diesel-run vehicles? Ayush Mishra and Tariq Ahmed takes a test drive.
Union Minister of Road Transport and Highways Nitin Gadkari asked the automobile industry to cut production of diesel vehicles on September 12th morning. He also issued a veiled warning saying if the companies don't cut the production, the government will raise taxes to a level that selling diesel vehicles will become unfeasible. Addressing the annual convention of Society of Indian Automobile Manufacturers or SIAM on Thursday, Gadkari also said that he was going to request Finance Minister Nirmala Sitharaman to increase GST on diesel vehicles by 10%. But within a few hours, he clarified on social media platform X that no such proposal was under active consideration of the government. But in between the two statements, stocks of automobile and oil marketing companies fell like 9 pines. The BSE Auto Index ended 1.8% lower. Ashok Leyland and Tata Motors were down 3% each. Nifty ONG Index was down 2.3% in Tuesday's afternoon trade. BPCL dropped 3.3%, IOC 3.5%, and GAIL dropped 5.3%. Hindustan Petroleum and Petronet shed over 11%, bearing the maximum brunt. But what do experts think about Gadkari's statement?
So the idea of the Minister Gadkari to urge the automotive industry to look at different fuel combinations to wean away the India as a country from the import of petroleum products, to reduce our petroleum product import dependence, and also make India a kind of a leader in alternate fuel vehicles.
Due to high levels of pollution, diesel-powered vehicles have been in the eye of the storm for long. They produce particulate matters at a very high level from the combustion process. In July of 1988, the Supreme Court, in a landmark order, had banned diesel buses and ruled that no buses more than 8 years old should be allowed on the roads of Delhi unless they ran on CNG by April 2000. And over the years, their share has come down considerably. Portion of diesel-powered passenger vehicles was 17% recently. It was 54% in 2014. India's biggest car maker, Maruti Suzuki, has stopped selling new diesel-run vehicles from 2020. Another major car manufacturer, Hyundai, has only 4 diesel-run variants among their 13 models in India, and only 18% of their total cars have diesel engines. For Tata Motors, it is 15%, and Kia Motors, 34%. And Renault, Nissan, Skoda, and Volkswagen have already given up on their diesel engines. Meanwhile, the government is driving the shift towards electric mobility, though less than 2% of India's nearly 4 million in-car sales last fiscal year were EVs. Government wants to make it 30% of total car sales by 2030. So amid this churn, what does the future of diesel vehicles look like?
Diesel, is a dirty fuel, today. And if you see, like, as you said, most of the OEMs have already started moving away from diesel. I think in 2014, the penetration levels were above 50. and now it is around 16-17%, right? And obviously we are in the last leg, of diesel, when it will flourish. But basically, why it is happening is, because if you see India, so India, one of the biggest challenges is pollution, right? So today, India has 39 cities out of the top 50 polluted cities in the world, basically in big metros. I think the challenge is much even bigger because, a diesel, because it emits, particulate matter, which is less than 2.5, it is directly breathable.
An exception to this trend is Mahindra & Mahindra, which has a portfolio dominated by SUVs, and currently 82% of its passenger vehicles are diesel-powered. Also, most commercial vehicles, including emergency vehicles like ambulances, vans, buses, tractors, and trucks, are powered by diesel engines. For instance, 80% of the total commercial vehicles from Tata are diesel-powered.
I would not write off the diesel engine as yet. There are many advantages. The torque is higher, the power is higher. So if you're looking at off-roading, kind of experience, or if you're looking at, the tractor industry will still go on to diesel, they won't shift yet. And maybe some technological breakthrough will come in, which would address the emission concerns of the diesel vehicle and then make it at par with the petrol vehicles. And therefore, to maintain a balance, you can't have lopsided. When you import crude and refine it, you produce both diesel and petrol. So if you find no use of diesel within the country, either you have to export it, right? Or you have to do something else. So therefore, it's always useful to have some balance between petrol and diesel.
But in the luxury segment, diesel variants continue to be popular. Here, their market share has improved from 31% in 2021 to 33% this year so far. But the government has been taking measures to reduce the number of diesel and petrol engines in India. Cars that are fueled by diesel and petrol engines come under the highest GST slab of 28%. Then there is additional levy of 1 to 22% depending on the category of the vehicle. And older diesel and petrol engine vehicles attracted green tax too. Meanwhile, to promote the electric vehicles, the government has put them into the 5% GST category with additional subsidies given to the manufacturers and a discount to customers. Government also promotes other green fuels like CNG and LPG. Currently, locally manufactured CNG-powered vehicles get a discount up to 40% from the government. But what is the way forward?
So if you look at long-range trucks and look at, tractors, I already talked about tractors, right? But, there are use cases emerging where we are running LPG trucks, we are running CNG trucks, we are running electric trucks, right? We're running alternate fuel, other trucks, right? So the minister was urging Indian companies. He took some example of foreign companies. He was urging companies in India to also diversify their vehicle fleet and make alternates to diesel vehicles, even in the busing and heavy vehicle sector. Like I said earlier, there will be always some use cases where we may need diesel vehicles.
Experts suggest that a complete ban on diesel vehicles is not feasible. Also, there are technologies that are being developed to bring down the pollution levels of diesel engines. Diversifying the fleets of EVs and CNG vehicles to replace the heavy diesel-powered vehicles is the first step, and investing in research and development of the alternative fuels is the next.
While the diesel-powered vehicles will face a roadblock ahead, emerging technologies have indeed put the automobile sector on a fast lane. Artificial intelligence, for instance, has made a headway into the sector, ushering in an era of self-driving cars. Like the world, India too is on the cusp of an AI revolution. Its flourishing tech ecosystem is embracing AI. However, several capacity gaps continue to hamper its march. top companies like Tata and Reliance are now pairing up with global giants like NVIDIA to bridge this gap. So, can NVIDIA help India overcome the AI gap? Abhijit Kumar has the answer.
NVIDIA, popular among teenagers and gaming enthusiasts for its graphic cards in PCs, has stamped its authority in building computer chips for artificial intelligence. The California-based company dominates the market for chips that work with massive amounts of language data. According to reports, the company's growth in the field has been such that many startup ventures in the US trying to enter into chip making have seen reduced funding in the first 3 quarters of this year. NVIDIA's dominance has resonated in its share price as well, with the stock growing over 240% in the past 1 year. Coming to the AI computing scene in India, the growth has fallen short of satisfactory in recent times. India's first supercomputer, Airavat, installed at CDAC in Pune, has been ranked 75 in the list of 61st edition of the top 500 global supercomputing list released recently. Though remarkable, this ranking doesn't justify the immense AI potential that the Indian tech ecosystem carries. So, what are the capacity gaps that hamper India's AI growth? Jayjeet Bhattacharya of think tank Center for Digital Economy Policy Research shares his perspective.
It consumes enormous amount of compute power, which means enormous amount of electricity, water for cooling. And again, India is lacking on that. We don't have enough power still to just push our regular industries, MSME industries. So diverting power to AI becomes a policy challenge. And third is manpower, which even though India is abundant in terms of IT manpower, we still have a challenge in terms of manpower, which has the requisite skills for AI at a deep skill level.
The pursuit of large language models akin to OpenAI's GPT-3 has been a significant trend in AI research globally. But the lack of computing infrastructure poses a challenge, as AI development demands substantial computational power. In a recent interview, NVIDIA chief Jensen Huang said that OpenAI currently has more than 10,000 GPUs, equivalent to 40 AI supercomputers. Finding potential in this challenge, Reliance Industries and Tata Group recently joined forces with NVIDIA with the promise of accelerating India's AI capabilities. According to a Reuters report, the partnership will allow Reliance access to the latest version of NVIDIA's Grace Hopper superchip, its AI chip optimized to perform interference functions that power apps like ChatGPT. In its collaboration with Reliance, NVIDIA will develop India's own foundational large language model trained on the country's diverse languages. Reliance will create AI applications and services for its 450 million customers. The AI infrastructure will be hosted in data centers ready for AI-ready computing. Reliance said that the new AI infrastructure will foster a host of India's AI projects like chatbots, drugs discovery, and climate research. NVIDIA will provide AI supercomputing services and technologies, while the execution and implementation will be managed by Jio. With the Tata Group, the NVIDIA aims to create an AI infrastructure to support the local economy. For example, AI can support rural farmers to interact on mobile devices in their native language to get weather information, crop prices, etc. The 6 lakh strong TCS workforce will also be reskilled in AI. So, what are the synergies playing out between the Tatas, Reliance, and NVIDIA?
Tata Motors will be using it in design and presumably in simulated testing. Reliance will using AI to create large language models in Indian languages. And once you've got LLMs, etc., it will be trying to leverage this. The synergy is basically NVIDIA makes the best AI capable chips in the world. So NVIDIA has a lot of experience putting its own clusters together. And if it's working with a big organization which knows what it wants, will probably be able to do this very effectively.
So NVIDIA has the compute technology, but does it have the wherewithal to actually run those technologies, to actually power those, to actually bring in enough water to cool those processors? No. Which is where TCS and Geo fit in very well.
Building large language models requires not only computational power but also extensive data sets and research expertise. Could there be some challenges to this collaboration?
Stage India being India, you'll run into some kind of regulatory challenge.
So, apart from regulatory challenges, what else could become a problem for India's AI growth?
There needs to be clarity in terms of who is bringing the actual dollars in, and then who is going to consume what they create, who is going to the market, and therefore who's going to get the revenues out of this infrastructure. How will that get divided between the players? But I'm sure it will be a success given the maturity of the three stakeholders.
While the battle to dominate the artificial intelligence space is intensifying, the partnership with NVIDIA holds promise for the Tatas and Reliance. With that, India's AI journey could soon enable scientists and researchers to find solutions for some of the world's most complex problems.
Like the tech sector, India has a flourishing pharma industry too, which has made its mark across the globe. And a big name in India's pharma sector, Cipla, is up for grabs. A three-way fight is going on between Torrent Pharma, Dr. Reddy's, and private equity giant Blackstone to acquire the country's third largest pharma company. Experts say that Blackstone may not go ahead with the buyout given the recent rally in Cipla's share. So, which of the other two contenders makes a good fit for Cipla? And what will the deal mean for investors? Harshita Singh finds out in our next report.
In what could be the biggest pharma deal in India, Torrent Pharma, Dr. Reddy's Laboratories, and private equity giant Blackstone are eyeing Cipla's 33.47% promoter stake. The transaction will trigger an open offer of an additional 26% stake, leading to a majority buyout of 59% equity in Cipla. At the bourses, Torrent Pharma has been languishing in the negative territory since it was reported to be a contender for Cipla's buyout. The latter, on the other hand, has shown an impressive rally of 15% since the reports of promoters looking to exit came out. The second competitor, Dr. Reddy's, has logged a nominal gain of 2% since September 5. Torrent's underperformance comes amid concerns of the debt that it would have to take to fund Cipla's buyout, which is over twice its size in revenue terms. But analysts still consider Torrent a better fit for Cipla's business than Dr. Reddy's, given its strong acquisition track record and limited portfolio overlap.
The primary concern is the deal is too big and Torrent doesn't have resources to finance the deal. So obviously they'll need to borrow to finance this. And we know if you borrow, the obvious consequences, the risk profile of the business worsens, and it'll be very significant leverage that Torrent will have to take. If Torrent goes and buys it out, the investors would be more confident about Torrent kind of making more value out of Cipla versus Dr. Reddy's making more value out of the transaction. It's also the track record of Torrent that actually inspires investors' confidence.
Analysts note that Cipla's strong presence in respiratory and anti-infective segments is complementary to Torrent's absence in these acute therapies. Globally too, Cipla's strong US portfolio and leading position in South Africa with Torrent's Brazil presence will enable cross-market selling and faster scale-up. Dr. Reddy's, meanwhile, has a higher overlap with Cipla in both domestic and global markets. This may not lead to meaningful synergy, experts believe. While the three stocks will likely continue their current trajectory, analysts advise caution amid emerging regulatory risks.
The government trying to intervene in the way doctors prescribe drugs. They want doctors to prescribe generics and not brands. What's happening is branded prescription is getting shifted to trade generics, and trade generics will not generate as high ROI as branded prescription business generates for companies. So I think one of the large value drivers for acquiring Cipla is their branded prescription formulation business in India. So I think there are uncertainties on the longevity of the branded prescription formulation business, how long that will remain attractive.
While Torrent and Dr. Reddy's are able to pull off the deal via a combination of equity infusion and debt accretion, the transaction will dilute the earnings per share for both stocks. The debt accretion will also take the net debt to EBITDA ratio for Torrent and Dr. Reddy's to 3.5 times and 1.7 times respectively. Thus, investors should remain cautious and wait for more clarity on the deal to emerge, experts suggest. Today, on September 14, the Wall Street will react to the latest inflation data released in the US last night.
He's making plans for an early retirement. Business Standard.
Meanwhile, US giant Apple has been making inroads into India. From 2% in 2019, the company has increased its market share to 5% now. This week, Apple CEO Tim Cook unveiled the latest iPhone 15 series along with Watch 9 series at the company's Wanderlust event. The new launches have put Apple fans or iSheeps into a frenzy. Sanket Kaul tells you about the new features and pricing of the new Apple products.
The new iPhone 15 lineup includes iPhone 15, iPhone 15 Plus, iPhone 15 Pro, and iPhone 15 Pro Max. The iPhone 15 series will be available in 128, 256, and 512GB variants. The iPhone 15 continues with an aluminum frame but gets color-infused back glass. It essentially means the back cover on the iPhone 15 models will no longer be glossy but textured in matte finish. On the other hand, iPhone 15 Pro series would feature an aerospace-grade titanium frame. The iPhone 15 and iPhone 15 Plus will feature a new 48-megapixel primary camera and a 12-megapixel ultra-wide sensor, a significant upgrade from the 12-megapixel sensor on the iPhone 14 lineup. The screen supports Dolby Vision and True Tone with a peak brightness of 2000 nits and an HDR brightness of 1600 nits. This is almost double the 1200 nits of brightness found in the iPhone 14 series. The iPhone 15 series will be the first one to switch to a USB-C charging port. This comes after the European Union directed all phone makers to introduce USB-C charging ports after the autumn of 2024. So, you would be able to charge all your Apple products using a single cable. Apple's other recent launches, Watch Series 9 and Watch Ultra 2, will be an upgrade from their previous versions. While the screen brightness has been increased to 2000 and 3000 nits, respectively, both versions will have an extended battery life. The iPhone 15 will cost between 79,900 rupees and 1,09,900 rupees for the 128, 256 and 512GB variants. iPhone 15 Plus will range from 89,900 rupees to 1,19,900 rupees for all its variants. Both phones will go on sale from September 22 with pre-orders beginning at 5:30 p.m. on September 15.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
And it will be the first time that Apple will be selling a made in India iPhone at the launch. Well, that's all for today. For more news and analysis, please log in to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.